Very many thanks for staying with us. Welcome back to the program. Well, just a day after the Monetary Policy Committee of the Central Bank left the monetary policy rate at 14% and other parameters unchanged, the all-share index of the Nigerian stock market was positive at intraday, gaining 0.25%. Let's find out from Temple Asaju if that positive trend has changed. Hello, Temple. What's the latest on today's trade? We saw a 0.25. Thank you, Temple. We saw a 0.25% increase on the index at intraday. What's the update?
So that has increased by some 10 basis points. We are now doing some 35 basis points increase in the key benchmark index now. We have been seeing the appetite on the banking names in the markets. We've seen a lot of the banking names currently moving upwards. They are the major ones dominating the top trades charts right now in the system. You look at Fidelity Bank earlier in the morning, it rose by some 9%, but then we saw a bit of profit taking depreciating that level of interest in Fidelity Bank. As we speak, it's now about some 5.74%. Next to that is FCMB, which is now some 5.98% in terms of share price appreciation. So if you look at Fidelity Bank, we've seen some 17 million units of its shares traded, 94 million units of FCMB shares traded. Axis Bank at a point in time had some 90 million units of its shares traded and was the most actively traded in the market. And ditto for Guarantee Trust Bank, Zenith Bank, which has also done some 21 million units. We continue to see these activities, demands from the offshore investors and all, as well as UBA. All the banking names are basically up at this point in time. The reason for that is because they have all bottomed out in terms of losses. They had hit their support level, and so it gives room for a lot of investors to come back to playing, and that has translated to some kind of close to 1% positive movement in the banking indices as we speak in the market. But if you look at other counters like the oil and gas and the industrial segment of the market, oil and gas is down some 0.38%. You have consumer goods flat. You have the industrial goods segment of the market also flat. So we're seeing this interest in the banking names alone, the financial services in general terms, and that has also helped the general level of volume of transactions in the market. If you look at the total volume of transactions so far, it's about 235 million units that has been done so far, and that represents about an increase of 90% in the market. Ditto for the value of the transactions that we've seen. Basically, these two metrics in the market are currently positive, Emana.
Okay, Temple, agreed the banking sector has bottomed out on investment. Yesterday, the CBN retained the rates. Could you talk us through a little bit more on the relationship between that, what happened yesterday, the retaining of those rates, and what's going on at the market today?
So again, the fact that the CBN MPC maintained all rates, there was no change. Asymmetric corridor remained at plus 200 minus 500, and of course MPR is at 14%, the 15th time since July 2016. You got the CRR, the cash reserve ratio, at 22.5%, and of course liquidity ratio at 30%. It tells about the fact that we didn't have any repricing in the banking system. So investors continue to push for the banking names. If we had seen some kind of 50 basis points increment like a few analysts had argued before the MPC took place, then perhaps at this point in time we would have seen huge sell-off on the banking names in the market. So for the fact that we had rates maintained so that investments can continue to trickle in the way they've been trickling in, because the CBN MPC yesterday, maintained the fact that yes, we have been seeing slow growth in GDP, but that is gradual as well. There's need for us to now maintain to keep the momentum so that we don't see any form of decline, and that's the reason why they refuse to tighten. Of course, the other side of that point will be the reason why they refuse to lose. So this just kind of sends some kind of positive signals to the market. It keeps the offshore investors coming in and to have a way to exit when they want to. But then again, more importantly, is the fact that it gives a lot of the domestic investors that have now keyed into the market way before now to be able to, take profits, no matter how minimal it is, on some of these counters as things have been playing out in the market. Emana.
All right, thank you, Temple.